Well, confidence among U.S. small businesses has dropped to a 7-month low. According to a report by the National Federation of Independent Business, optimism fell to 91.2, the lowest since September. William Dunkelberg is chief economist at the NFIB and is known as the authority on small business. And he joins me now here in studio. We were having such a pleasant conversation during the commercial break. But unfortunately, this report is not pleasant. We have more firms reporting that sales were on an upward trend. There were some modest improvements, but that's about where the optimism stops, isn't it?
You're right. If you reach around down in the grubby numbers, you'll see that we did have an increase in the net percent of owners saying, hey, sales are finally headed up. But you still have like 20 percentage points more saying down quarter on quarter than saying up. So it got better, but not good enough. And of course, profits go with it. The profit trends have improved a little bit, but you still have, kind of 3 guys and gals reporting lower profit trends relative to each one saying good.
And Mr. Dunkelberg, I was telling you during the break that I was also listening to you with my colleagues, Tom Keenan, Ken Pruitt, on the radio this morning. And the interesting thing, you mentioned to them that the index has fallen for 2 months. April's drop wasn't as bad as the decline in March, but still nowhere near where people might say, you know what, this economy is going to start to get up, the engine's going to start to hum yet.
That's right. If you look at the average value of the index over the past 35 years, it's around 100. And we're at 91. We're way, way below where we should be. And typically in a recovery period, the optimism index jumps really high.
Where should we be?
105, 110, right around in there.
You've been covering this for a long time.
35 years.
Does this consecutive months in declines, does that give you pause?
Oh, this is a bummer. It means that we're still really at recession levels here. And if you look at what the small business sector, which produces half of the private GDP, if you look at what they're doing, they're not going anywhere, which probably explains in part why our GDP growth numbers haven't been great, because half of the economy really isn't working yet.
Well, 7 of the 10 components you use in calculating the survey dropped. What were they? Give us some.
We had a decline. An important one was a decline in the percent of firms planning capital outlays. So I didn't think it could go lower,
and you know
what?
And that's interesting, because I saw that and that jumped out at me. What's the significance of that?
Well, it's capital expenditures that raise worker productivity in the long run and expand our ability to produce output. And so if we're not investing in new equipment, new technologies, and new techniques, or even a truck to deliver to customers, then we're not raising worker productivity. So
and it does go back to the worker, because if you're raising productivity, that means more hours worked, and that means more money in the pocket of the employees.
Right,
absolutely.
Exactly. So that's very important that that's not happening, and we'd like to see more of that going on. And we had also a decline in the percent of firms who said they had a job opening that's hard to fill. That means that the labor market got a little weaker. We predicted the unemployment rate would go up, which it did last Friday. We need to see some more strength there. The hiring plans, we have a net 2% saying I'm going to create jobs. That is, hire more people than I fire. So only a net 2. We should be looking at 10 to 12 if we were having a good recovery, and we're not.
You say that the firms in the West, Central, and Mountain states, they were more optimistic about the economy. Why?
Well, there's something going on out there. It's probably called agriculture.
Absolutely, yeah.
and some manufacturing along the west of the Mississippi and through that territory. So
is that why the Farm Belt's been doing particularly well?
Yeah, if you look even at our small data, I mean, if you look at the stock market, who's doing well? Caterpillar, it's people that are manufacturing stuff, the big manufacturing firms and exporting firms, and of course the big banks are always making money.
But you talk about the manufacturing firms, the Caterpillars and such, they are also at this point in time, even though things are not where they should be, they are poised to do even better when this economy finally does start to heat up.
They are, and of course the weak dollar is helping them out.
Sure.
And even amongst our little firms, and NFIB's members are quite small, our average employment is only 10, our manufacturing firms are the most optimistic of all the industrial groups that we have, and followed by the agriculture firms. They're happy. Prices are rising there, profits are good there. But the service sector, which is where we employ lots of people, consumers are not spending there yet.
Mr. Dunkelberg, manufacturers are leading the way, but they're not hiring a lot of people, are they?
Right. Manufacturing, the nature of manufacturing is capital intensity.
Sure.
So we use lots of conveyor belts and robots and things like that. So we've had in this economy very rapid growth in the manufacturing sector and exporting. So if you compare GDP today, it's like 40 billion higher than it was at the peak in 07, but we're using 7 million fewer workers to make that output, and that's the big problem we're having on the
it's interesting. The numbers
side.
come, just tumbling out of your mouth, but they're still staggering figures.
They
Last
are.
minute, firms have been raising prices because of a backlog since '07. Is inflation back on Main Street?
Well, I think it is. What happened is, starting in the fourth quarter of '08, when you and I, consumers, started saving and stopped spending, we had too much inventory. So for the last 2 years, in fact, 25
They've
months,
been having a fire sale, haven't they?
we've been cutting. More have cut prices than raising prices. But in February, we had a net 5 up, we had a net 9 in March, and a net 12 in April, and we're now almost looking at double digits, raising more than 5%. So back on Main Street, the prices are going to rise, and we'll see it in the CPI measures.
William Dunkelberg, he is the chief economist, NFIB, joining us here on set. Pleasure to meet you,
Thank you, sir. Pleasure to meet you. Thanks.
Thank you.